Cathie Wood is famous for making these huge, long-term bets on disruptive tech. And frankly, when she speaks, investors tend to pay attention. So today, we're going to dig into her thinking, her bold defense of Elon Musk's pay package, her absolutely stunning $2,600 price target for Tesla, and her take on who's really winning the global AI race. Let's get right into it. So here's how we're going to break this down. First, we'll look at her case for Elon Musk's pay. Then we'll dive into the bigger philosophy behind that decision, her critique of short-term thinking. After that, you'll see how that thinking leads to a jaw-dropping price target for Tesla. And finally, we'll zoom out and see how this all fits into the much bigger AI race happening on the world stage. All right, first up, that shareholder vote on Elon Musk's pay. And we need to be clear, this isn't just some end-of-year bonus. We're talking about one of the largest compensation packages in corporate history. And yeah, it's kicked up a real firestorm of debate. I mean, this really is the question at the heart of it all, isn't it? Is any single executive worth that much money? It's a question that puts incredible performance right up against all historical precedent. While Cathie Wood's answer? It's an absolutely clear yes. She doesn't just see him as a CEO. She sees him as a generational visionary. In her own words, the most productive and visionary human being on Earth. But to really get why she thinks this, you gotta look at the numbers. See, this isn't some guaranteed bonus. For Musk to actually get paid, Tesla has to achieve a mind-boggling 41% compound annual growth rate for 10 years straight. As Wood points out, a company the size of Tesla has literally never done that before. And that right there brings us to the absolute core of her argument. It's pure pay for performance. The interests are perfectly aligned. If the shareholders don't get rich, Musk doesn't get paid. It is truly as simple as that. So, what's the bigger picture here? Because for Cathie Wood, this isn't just about one CEO's paycheck. This is a fundamental statement, a shot across the bow at the kind of short-term thinking she believes really plagues the market. So here's the conflict she's targeting. On one side, you've got the problem, this obsession with quarterly earnings reports. It forces management to just be reactive, and it just strangles any real long-term innovation. But on the other side, you have what she sees as the solution. A pay structure like Musk's, which forces everyone to focus on the long-term vision and aligns the CEO's success directly with shareholder value. And because her focus is so intensely on that long-term disruption, she argues that the traditional corporate watchdogs, well, they're just using the wrong tools for the job. They're trying to measure a spaceship with a yardstick, and they're just not grasping the unique long-term bet that Tesla is actually making. Okay, so if this giant payday all hangs on future performance, where in the world is all that value supposed to come from? Let's really dig into the numbers behind ARK's massive vision for Tesla. And this is the key question for any investor, right? It's not about what Tesla is today. It's about what ARK believes and what Musk is getting paid to make it become tomorrow. And here it is, ARK's price target for Tesla by the year 2030 is $2,600 a share. Now, that is a number that has made a lot of people's eyebrows shoot up, so let's break down exactly how they get there. Now, pay very close attention to this, because this chart, this is the whole story. A staggering 90% of that future valuation has almost nothing to do with selling electric cars. It is almost entirely riding on the successful launch and scaling of a fully autonomous robotaxi network. That is the entire bet. And if you thought robotaxis weren't ambitious enough, there's another even bigger layer. Wood sees humanoid robots as the next massive frontier, a problem that's way more complex than autonomous driving. And here's the real kicker. That massive potential isn't even meaningfully factored into that $2,600 price target. It's basically considered all potential upside on top of that. Okay, so let's pull the camera back now. Let's zoom out from just one company to the entire global stage. Because this long-term vision for AI and robotics, it's playing out inside a fierce geopolitical race, and that race is primarily between the United States and China. So when you ask her who's winning this global AI race, Cathie Wood's answer is very direct. I think we are ahead. But she's quick to point out that the US lead is built on a totally different strategy than China's, and the competition is heating up incredibly fast. The two countries have just fundamentally different playbooks. The US model, it's driven by private companies, historically using their own proprietary software. China, on the other hand, it's a state-directed command and control system. And what's really interesting is that after being cut off from US tech over IP theft concerns, China was basically forced to go all in on open source software, which, as it turns out, has its own serious advantages. You know, that pivot to open source has actually allowed China to move at an incredible speed. Wood acknowledges their progress is really impressive. With AI now being a top national priority, they are just pouring resources into closing that gap. In her words, they are running very fast, and this is quickly turning into a true two-horse race.
So, all of this leaves us with one final thought to chew on. Whether you're looking at a single ambitious company like Tesla or a global superpower like China, the common thread here seems to be the same. In this new era of technological disruption, maybe the ultimate competitive advantage isn't just money or talent. Maybe it's having a radical, unwavering, long term vision.